Hey guys and gals, it is Mark Coe for the 12th of June, Monday here, Monday of Fed Week. Very exciting Fed Week, isn't it? It's always exciting with our FOMC. But I wanted to take a look at levels today and the levels from the overnight reports and for the futures morning reports. And I wanted to really explain my viewpoint on these and how to use them. I got an interesting question last week where I was thinking, if one person has this question, multiples probably have this question. And I always look at it as really easy, but from the standpoint I approach markets, it's all going to make sense to me. And when you're learning it, it can be challenging. So here's what I want you to understand about the buy levels, the sell levels, the support zones, the resistance zones that are all produced on the nightly report. So let's take a look at dollar yen, and let's just run through what the analysis was coming into Sunday night, the 12th of June. So this is when the report is produced, where my cursor is. That's Sunday evening. And let's just look at what the analysis says. So I'm referencing the report, the spreadsheet report from the 12th of June. And what it says is dollar yen, it gives three support zones. It gives a support zone at 110.15. Right? And you see all my levels are coming from prior levels, and I do a lot of that in the levels work. So if anybody that's ever seen my classes or my webinars, you'll understand where it's coming from. The second support zone is 109.85. The third support zone is down at 109.35, but it never came into play today, so I'm not going to focus on it. Resistance zone number one was 110.75. Again, didn't really come into play. So let's think about a strategy. Let's think about a mindset of how this works and why this would be beneficial to somebody focusing on a short term. Remember, that's what these are. They're not long-term trade calls. They're not long-term levels. They are meant for the next session. So this is what the market looks like when those levels are produced. And so this is what we're thinking. As the trader using these levels and how to diagnose, I want to see what reaction becomes to a level. And by all means, I expect some reaction at these levels. So think about how this works. As we trade into 10.15, it's clearly a level because the market reacts. What does the market do with trade down into 110.15? Does it bounce and come back to opening levels? If it was strong, it should. It could even trade to resistance if it's strong. But lack of a reaction starts to tell you about pressure within that market. Right? Because you're expecting reaction. So lack of a reaction tells you that there's pressure on that level. And by definition, pressure on the continued sell side. So this market breaks through 10.15. Next target becomes this 109.85 area. Because if the market's bid or strongly supported, it should be able to rally and trade above support levels. So now we're down into support number two, which again, I would expect a reaction at a support level. There's your reaction. So think about the difference, having this mapped out hours and hours in advance, being able to trade that way. Maybe you have this idea that you want to come in and be long dollar yen. Okay, that's fine. So be long dollar yen, but be long at levels. And then what you start to understand is when you buy your dollar yen at 10.15, 10.16, and the biggest it can do is get up 16 points, and you're all of a sudden testing entry again, maybe you don't have the strongest currency at that stage. Maybe it needs to test lower. It needs to flush out the sellers to the bottom side. Maybe you have the idea of wanting to sell dollar yen, but you need to know what levels to target, what levels to look out for. So I've done the work for you. I've laid it out how to read the levels in terms of what the reaction is. So let's take it a little bit further. So dollar yen breaks support number one. Again, resistance number one is never challenged. So it tells you the weight of this currency so far to start the day. Here's support number two, 109.85. Again, reaction. What does the reaction do? Trades right to the breakdown of that 110. That's it. That's as much as it can muster. So you see the weakness on the day. You see the weakness on the day. And so if you're focusing on a day trade, you see the pressure that it's under from a number of reasons. One, you're breaking supports. You're not challenging resistance. Two, you're getting little reactions at supports, but you're not getting big reactions. Right? So it tells you the pressure. It shows you the pressure. Dollar yen toward the end of the day manages to get back above the 85, but it was pretty hard fought. It was pretty challenging. So coming into Asia for tomorrow night, there's still a bit of offer tone to dollar yen. But what level is it holding? You can extend that level over for Tuesday. And you can see what it's doing. That's the level. That level has been on your screen for 24 hours. And so the advantage you're going to come in with knowing that these are the levels you want to focus on. And by all means, if it blows through a level, you understand how strong or how weak something truly is. And when you look at euro dollar on Monday, euro dollar didn't do a whole lot on Monday, just traded a range. That's all it really did. And it's traded within recent ranges. It hasn't had a spectacular move one way or the other. But in looking at the levels, what do you see from euro dollar? Here's your support number 1, 11.65. Here's resistance number 1. Support doesn't get tested. What happens up near resistance? It fails. All right, so it's a range-bound currency that can't break through either side. That's pretty typical of what happened on Monday. Didn't do anything, just sat in a range. It sat in a range. So as you continue to look at those things, as you continue to look at levels, you can understand that if you're short side, what you're doing at support zones. If you're long side, what you're doing at resistance zones. But those zones are all mapped out for you. I'll give you another example of a great one in pound dollar. Pound dollar was a really nice one because it called basically the bottom at support number 3, 26.40. There's your 26.40. Right, 26.40. After that whole sell-off, the low's 39. So one tick away. But that level was marked. That level was known to us yesterday. So understand that when you're coming into these markets focused on where you want to be looking, that's what these levels are doing for you. So if you guys have any questions, send me email, send questions. I'd love to hear from you, and hope you're doing well, and we'll talk to you soon. Cheers.